Joining us is the Chief Executive Officer of Genco Shipping and Trading, ticker GNK, John Wobensmith. John, good to have you on the program here. Thanks for joining us this morning.
Yeah, thank you.
So I want to talk about what you see in your business right now. Obviously, everybody's trying to figure out what kind of demand pickup is happening. What insight do you have, given the role, of course, of shipping within global manufacturing and trade? Do you see things starting to pick up right now?
Yeah, we actually have, and it's interesting. Obviously the first half of your segment has been based on tech quite a bit,
Yep.
and obviously very important. But shipping is, carries almost 94% of the world's goods. So it's a very important industry from a global scale. But as you said, it does give us a good look at what is happening around the world. We had the dry bulk shipping industry, which is what we're focused on, shipping iron ore, coal, grain, food products, cement, and building materials. Has really been led out of the second quarter COVID shutdown, if you will, by China, with very large growth in steel production, increased shipments in iron ore as well. And so we've seen rates improve quite a bit, daily rates, on both our large vessels, but also our medium-sized and smaller vessels coming out of the second quarter where we are today.
Are there specific commodities or materials that are picking up in demand quicker? Is it as narrow as, say, big demand in iron ore or something agricultural? Where is the strongest pickup and rebound happening?
Yeah, so I would say the two largest commodities so far have been iron ore, that goes directly into the steel industry, again, particularly in China. But then we've also seen a very heavy grain trade come out of Brazil and Argentina over the last few months. So that is soybeans and corn that are being shipped. China's their pork industry, coming on the back of recovering swine flu over the last couple of years, we've really seen growth in the soybean trade coming out of Brazil.
When you reported earnings earlier in the month, your revenue was way ahead of the highest estimate that the street had for you. And there are 8 analysts that cover the stock, so there are plenty of ways to miss, and that didn't happen. You guys came ahead of the expectations. How much visibility do you have right now? Because in addition to this pandemic we're still dealing with, it's like the trade talk and that chatter is kind of heated up again between the U.S. and China. So in terms of guidance, so what were you able to provide, and how much visibility do you have right now?
Yeah, so look, I think for the rest of the year we have decent visibility. We put out our third quarter forward numbers, which is about 60 to 65% fixed when we put out earnings. We had pretty strong rates on the Capes of just below 20,000, and then our minor bulks were hovering around $10,000. Those are our mid-sized ships. Keeping in mind that our operating expenses are around $4,500 per day. So we've definitely seen an improvement in cash flows, again, coming out of the second quarter.
I hear iron ore and ags. Do you have exposure to oil?
We do not have exposure to oil. We only are shipping in the dry bulk, which again is iron ore, it's coking coal, it's grains for food, and then building materials such as cement. Cement is another big commodity that we're shipping.
Do you feel on the agricultural side that it seems like you have good clarity into the demand right now for at least the intermediate term? Do you worry that we'll go back to the 2019 trade war talk and the concerns that brought for some of the agricultural commodities? Is that resolved in your mind in terms of what you can plan out for your business?
I would say it's difficult to say that it's fully resolved, but what I do find very interesting, which has not been widely reported, in July, China did 3 successive day records of U.S. corn purchases. So the first record they broke was they bought 1.4 million tons in one day. Then they went to 1.6 million tons the following week, and then very quickly to 1.9 million tons in a single day. We've also seen about 21 million tons of U.S. soybeans sold for the fourth quarter. and about 12 million tons of that was bought by the Chinese. So it does seem, at least on the agricultural side, that things are thawing at this point.
For the improvement that you've seen from the top line, when does that make it to the bottom line? I still see you have negative earnings on a trailing 12-month basis. Do you expect that to turn positive?
Well, look, I think it's very rate driven, and I think what we really need to do, again, we've been coming out of a pretty bad second quarter in terms of COVID, and as we look forward into 2021, what's really interesting about this industry right now is we have the lowest order book on record at only 7% of the global dry bulk fleet. So there are not a lot of new ships that are coming on the water, and as you balance that versus demand growth for next year, which is estimated to be 5 to 6%, versus a fleet growth of probably 2 to 3%.
Okay.
We should be continuing to see overall rates moving up.
And when it comes to fleet size, I'm curious, just given what we went through, no matter really what business line you're in, if you're in consumer products, shipping, maybe not so much tech, but just about everything outside tech, everybody kind of had to revisit their inventory, their supply. From the shipping side, are there peers, are there competitors, or does your own company look at your ship count and say, okay, we need more or less? Are there places that are selling off ships because they had too many? What do you want to do with your fleet size?
Yeah, look, we have one of the strongest balance sheets in the industry right now. So we have a very good liquidity position from a cash standpoint. We have low leverage. It certainly, in my mind, makes sense to start looking at M&A activity again. Again, I'm fairly positive as we get into the next year and a half, just looking at the very low order book in terms of ships coming onto the water versus what we anticipate in terms of demand growth, iron ore, coking coal, and grain driven.
So, John, when you say balance sheet, potential M&A, I know you also have a couple cent dividend right now. Is the money and the cash that you have, does it make more sense to go to the M&As instead of the shareholder activity? Is that where it seems like you want to be more prone to spend?
Yeah, look, I think there's a balancing act on capital allocation, and clearly we're looking at the dividend every quarter, and we'll do that again as we get past the third quarter. But as I said, as the industry has become more healthy, as Genco has a very strong balance sheet, in my mind, it makes sense to look at expansion.
All right, appreciate the insight into the business, John. Thanks for joining us here.
Thank you for having me.
John Wobensmith is the Chief Executive Officer at Genco Shipping and Trading.